We'll call to order the meeting of the Glendale Successor Agency. May we have a roll call, please?
Board members: Freeman.
Here.
Manukian.
Here.
Nagarian.
Here.
Weaver.
Here.
Chairman Quintero.
Here. May we have your report?
The agenda for the July 31, 2012 regular meeting of the Glendale Successor Agency was posted on Thursday, July 26, 2010 on the bulletin board outside City Hall.
Next.
Approval of the minutes of the regular Successor Agency meeting of Tuesday, July 24, 2012.
I'll move the minutes.
Second.
Minutes stand approved as submitted. Next, please.
Item 5 are oral communications. Discussion is limited to items not a part of this agenda. Each speaker is allowed 5 minutes. Members of the agency may question or respond to the speaker, but there will be no debate or decision. The matter may be referred to staff through the executive director for investigation and report.
And next, please.
At item 6A, Director of Community Development, regarding reaffirming Successor Agency as separate legal entity and amending rules and regulations for the operations of the Successor Agency. At 6A1 is a Successor Agency resolution reaffirming Successor Agency as a legal entity separate and apart from the city and amending rules and regulations for the operations of the Successor Agency.
Mr. Ochoa.
Yes, sir. The first two items on the agenda are rather pro forma with respect to the Successor Agency in the city and the former redevelopment agency. The first item, and certainly Ms. Bobolian can answer any detailed questions the council might have, but essentially with the passage of AB 1484, we are required to reaffirm the rules and regulations for operating a successor agency, which this board already, or successor agency already did back on February 28th, I believe it was. The law essentially requires us to reaffirm that at this point in time. That's basically the gist of this particular item. But if you have any questions, Elena can answer those for you.
Any questions?
Yes, sir.
What are the rules that we are?
The
Be liable for any.
the change. You had asked what the changes are. The main change
Rules that we're making.
in the rules, the changes that that gives you flexibility to meet on a special day as opposed to a set schedule.
Right, so it's just the meeting dates, scheduling the meetings.
Correct.
Opposed to scheduling it on a regular basis. We
That's
can have
correct.
special
And
meetings.
all the rest stay the same.
I'll move the item.
Second.
Roll call.
Board members: Friedman.
Yes.
Manukian.
Yes.
Najarian.
Yes.
Weaver.
Aye.
Chairman Quintero.
Yes. Next, please.
At item 6B, Director of Community Development, regarding replacement of Successor Agency appointee to Glendale Oversight Board. At 6B1 is a Successor Agency motion directing the mayor to appoint Mark Berry to Glendale Oversight Board, replacing Philip Lanzapane.
Mr. Ochoa.
Yes, sir. As you know, on the successor agency, the city of Glendale, or former redevelopment agency, has two seats. One is an appointment of the city council. That is the position that I fill. Another is a position representing the largest employee group of the former redevelopment agency, which would be the Glendale Management Association. Mr. Lanzapane had served in that capacity. With the reorganization of the organization that we have as part of the overall budget. If we are moving Phil out of the GMA classification, then we need to fill that spot with another GMA employee, specifically one that has expertise in the matters of redevelopment or former redevelopment such as it is. So we are recommending that we put our project manager, Mark Berry, into that slot in Phil's place.
Any comments? Not a motion.
Does he want to give a speech?
Well,
Does he want?
it's not a question of age, is it?
No, sir. Mr. Berry is a staff person, so he is not here at this meeting right now. I'm sure
You
he's...
do know
He's out
Mark
there
Berry
working.
quite well. Yeah, he's out there working. I'm glad he's not here. I think he'll do a fine job.
I'll move 6B1.
Second.
Roll call.
Board members: Friedman,
Yes.
Menuchyan, Najarian,
Yes.
Burr,
Aye.
Chairman Quintero.
Yes. Next, please.
Item 6C, Director of Community Development regarding summary of AB 1484 and recognized obligation payment schedule, or ROPES. At 6C1 is the successor agency resolution adopting ROPES for January 1 to June 30, 2013, ROPES 3.
Mr. Ochoa.
Yes, sir. One more time. We actually have for you a little bit more of a substantive discussion here for you. As you know, AB 1484 is the cleanup legislation that was recently adopted by the legislature following the dissolution of redevelopment under AB 27. And we also have what is known as the Recognized Obligation Payment Schedule, the ROPS. We have been working through that process both at the successor agency level as well as the oversight committee, oversight board level. And here to give you an overview of AB 1484 and ROPS 3, we'd have Mr. Lanzafame. Phil.
Mr. Chairman, members of the successor agency, we are back here again with another item that is being imposed on successor agencies and local communities through the dissolution of redevelopment. This slide, what I'd like to do is take you through a summary of new legislation, 1484, and then give you some detail highlights on the recognized obligation payment schedule that we're required to approve by and have it up to Sacramento by September 1st. This first slide gives you a little bit of background just on where we've been. We know that with AB 26, redevelopment was dissolved and that the successor agencies were formed. It also established a mechanism called recognized obligation payment schedules, to where successor agencies now needed to ask for funding in 6-month blocks. We did that with what we were referring to, ROPS 1 and 2, and we tried to put every single obligation we could think of. Those two were approved. All of the items on those two were approved, save 2 items. The city agency loan, which was the discussion, or part of the discussion with our budget, and then the set-aside of 20% for affordable housing. Both of those I'll touch on a little bit later. There are provisions in the new law to bring those back, but for now those were rejected as items. Everything else was approved. While it was approved, it's important to note that for the ROPS 1 schedule, we got about half a year of tax increment, and that was supposed to last through June of 2012. We did ask for approximately $25 million for our going forward obligations in ROPS 2. We were dispersed about $13 million. The shortfall would be made up with cash, but the Department of Finance has said they were not going to take any revised ROPS, so put it on ROPS 3, that obligation. What we're planning to do, and I'll go through it here, is use our cash and then ask for permission on that on ROPS 3.
And by cash, we're referring to the cash on hand.
Yes.
That the agency currently has, that was the former agency still had in the city treasury.
Cash on hand or the cash we received from the county?
It was cash on hand. When the agency repaid the city, the Department of Finance rejected that, and if you recall, we reversed it, so that money is sitting in successor agency accounts.
Including the 12.9 million?
The 12.9 was for the most part used for debt service, bond debt service, and those have been paid. We listed on both 1 and 2 all of our obligations, whether we had a payment to make in that 6-month block or not. The reason being is we wanted the Department of Finance to acknowledge that, yes, indeed, there was an obligation. We just didn't have a payment in that 6-month block. And we're trying to do that as much as possible to establish obligations. because once you get an approval, it's not an ongoing approval. The Department of Finance will look at every obligation every 6 months, and they could reject something that they approved in the prior 6 months. The law does allow, the new law does allow for a meet and confer, so that there is some ability for us to talk to the Department of Finance instead of a straight rejection.
What do you mean they could approve, or I'm sorry, what do you mean they could disapprove something that they approved in the prior 6 months?
Let's say in ROPS 2, which was for the current period we're in now, July to December, they approved staffing per our agreement for the Walt Disney project. And that was all we had. Well, next time we may have a larger number because we need to reimburse for public improvements. The Department of Finance could say, we do not recognize that as an enforceable obligation.
Okay,
Even though they recognized it previously.
Previously.
it's different. Okay.
We are now ready, again, the new law 1484 has advanced the schedule. We're now ready to present ROPS 3. This will be asking for money to fund those obligations that we anticipate occurring from January to June in 2013. I apologize for the size here, but AB 1484 is really technical amendments to the Dissolution Act. It began as cleanup legislation, and it is more turned into something that fixed any loopholes, or, my words, provides those in the state and counties a bigger hammer to the local agencies. You took the action on the first bullet it did acknowledge that we're separate legal entities. Interesting to note that some of the penalties for failing to do things as a successor agency are enforced on the cities.
Which seems counterintuitive to the idea of being separate legal entities.
They did set up some additional actions. We need to go through a due diligence review and inventory all of our assets, both for the housing and for non-housing. That's in addition to what we've just completed with the county for our agreed principles. They added significant new deadlines, and we'll talk about that in a minute, but the compliance has huge consequences if you miss. Again, some of those imposed on the local host city. It gives counties the opportunity to review the Department of Finance, or I should say our recognized obligation payment schedule. The county can say, we disagree with something on that. Ultimately, it's the Department of Finance that will make the decision on it, but this just adds another level of review and challenge to something that you as a successor agency would approve. The oversight board that was set up to oversee your actions would now have the county in the middle of that. It is not all draconian. There are some relief and safe harbor provisions. Once we do certain things, pay all the property tax, do our due diligence, we are able to reinstate the loans, the city agency loans, although with some limitations, and I'll talk those more later in the presentation. It also sets up a mechanism to continue affordable housing funding. And lastly, it allows for a management plan to identify assets and potentially retain them or dispose of them in certain ways that are more in keeping with how you as a redevelopment agency wanted to see those. But again, I'll touch on it more as we go through. Finally, it does give the Department of Finance, it does confirm that they are the final arbiter, although it does set up a meet and confer process that didn't exist before that would allow us to go and talk about something that was rejected. I should say one other thing on here, on that property management plan. What 1484 did do is it suspended the provision that we had to dispose of all of our properties immediately. So that is suspended until we we get through to this management plan. The first action that agencies and successor agencies were asked is what we're calling the true-up. When distributions were made, property tax were made in November, December, and January, it's been discovered that maybe successor agencies got more than they should have, and other taxing agencies not quite as much as they should have. With this law, there was the county auditor controller was required to, by July 9th, notify taxing agencies, successor agencies of any discrepancy. Then just 3 days later, payments were to be made by the successor agency, then distributed 4 days later by the auditor controller. And then on the 18th, if that was not done, there were non-payments, penalties for that. Glendale received our letter that said, no, there's no discrepancies, everybody got the amount they should have. We included this, though, to show you the types of schedules that this law is imposing. And I will tell you that just prior to the 12th, we received notice from the Department of Finance and the Board of Equalization that they couldn't meet that schedule. The penalty, if you don't make the payment, is to withhold property tax and sales tax to the cities. They told us that they couldn't meet this schedule. So there are schedules that were made up and included in this law that really can't physically be done even by the state's agencies. However, the Department of Finance is reviewing each calculation, and they will let us know again to confirm that, yes, everybody's been paid what they're supposed to be.
But if the Department of Finance can't make the schedule, what is their penalty?
You know, Mr.
Well, they're
Weaver,
exempt, right?
Nothing.
I had spoken of a due diligence review. We are required to hire a county-approved CPA to conduct this due diligence. They will look at all of our assets, all of our liabilities, revenues, all of our agreements from both the housing and non-housing. This will happen in 2 phases. Housing is going first. The due diligence review will ultimately give us, everybody, knowledge of what that unencumbered fund balance is that is sitting with all the redevelopment agencies. And the end result is to have those unencumbered funds sent back to the auditor controllers for distribution to the taxing entities. This is different than the agreed-upon procedure audit that we just recently went through with the county. It is yet another level of bureaucracy in this process.
And once those fund balances get distributed, they're gone. So in the sense of this being an ongoing funding source for the state, it's not. Once that money gets sucked up by everyone's one-year deficits, then we're right back trying to build a rowboat in the middle of the ocean.
And who pays for the CPA?
It is, you can, the successor agency does, but you can list it as an enforceable obligation and get tax increment to pay for it.
And if the county doesn't like the CPA we select,
They have got to approve the
Pre-approve.
CPA. Fortunately, the two recent firms that we've worked with, one of which we still have under contract, have been approved by the county.
oh, good.
However, very interesting to note, those firms and many of the firms in the state of California are not sure by what process or what standard they're supposed to conduct these. And so they're very hesitant to do it. These dates may get missed simply because there aren't enough CPAs to do the
So
work.
they couldn't give us an estimate on the cost because they don't know what they're going to do.
They were a little bit hesitant, exactly right.
The county will sit out there and play God and determine what CPAs they like or don't like.
Well, as I say, the county has approved the CPAs that we would use.
I heard, but
Yeah.
will they approve the same ones for this?
Yes. That's who they've approved. We've asked them, if we were to use these firms, would they be acceptable? They said yes.
Okay.
The firms just aren't sure how they're supposed to conduct
Understood.
this. We talked about a safe harbor, finding of completion. When the successor agencies, when they pay that true up, if there was a discrepancy, and they complete their due diligence review, and they send any unencumbered funds back to the county for distribution. The Department of Finance will then issue what they're calling a finding of completion. That means that successor agency, you've done everything you're supposed to do. And as part of that, there are some incentives in that finding of completion. As we said, we'll reinstate the loans between the redevelopment agency and the city. That's about $70 million. Those were previously rejected consistently across the state. This would allow you to go back, albeit with some limitations that I'll mention in just a minute.
So that is a definite, or is this to be considered?
I'll get to it, but to answer your question, there are some findings that need to be made that we believe can be made. Retaining properties with an approved property management plan. This is where you inventory the property that you have, and then you create a plan for using those, whether it be retain it for a government purpose, or sell it to a third party, or use it for some other type of development. And then finally,
A project management plan that staff will produce and we will approve as what, the successor agency?
correct.
And
The oversight
then,
board.
okay, then, is anybody going to have to bless our decision on the project management plan?
Yes, those will all be subject to the oversight board.
Not to the county, the state finance department?
Well, ultimately, the Department of Finance has to approve it. Everything goes to the Department of Finance for approval.
The plan and how we implement it?
Correct. Finally, pre-January 2011 bond proceeds are made available. There's still a bit of a conflict in the law here because there are some sections that say you can use your bond proceeds for those projects for which they were issued. This makes clear that it's only those issued prior to January 2011 and after you get the finding of completion. So there's still a little bit of confusion there, but we've put our bond proceeds in now so that we're able to use them, and you'll see those when we get to the ROPS. On the loan agreements, as we said, they will now become, if they were made for a legitimate redevelopment purpose, they will be reinstated. We believe that those will. That finding must be made by you, both you and the Oversight Board, and then the Department of Finance signs off on them. It does place some restrictions on how you repay it. You must go back and recalculate the interest from the origination using LAIF, the local agency investment fund rate. We have done that internally, and surprisingly, we're not that far off. It's, relatively speaking, de minimis. It's $1 to $2 million, maybe $3 million. Again, that's nothing to sneeze at, but in the relative to $70 million, we're pretty close. However, you can't start repaying yourself until the 13-14 fiscal year, which is ROPS 4, and that is January to June 2013. Then finally, your repayment can't exceed 50% of the increase in property tax that the other entities received. So if, for example, this ROPS, there was zero distribution because there wasn't enough to make all the payments, we wouldn't be able to pay ourselves anything back. If there were $4 million of distribution that were made in any ROPS period, the agency could repay the city up to $2 million. We think it will take at least until all our bonds are defeased in 2025 until we get back to that number of $6 million that we're repaying ourselves. But we do think that perhaps in 13-14, most likely 14-15, we will be able to start making payments to the general fund again, albeit much smaller than what we were before. And then finally, 20% of that amount that is repaid needs to be set aside in a new low moderate income housing fund to be used to fund affordable housing. We will, as we get more familiar with this, we will start preparing cash flow models so that, much like we did with the agency, we can start to plan our financial future both for the successor agency as well as the city. As I said, it also, 1484 also preserves housing funding. It did add the amounts owed to low and moderate income housing funds. Some redevelopment agencies needed to borrow from their housing fund to make ERAF payments or others. Glendale didn't do that, so that this really doesn't affect us. But this is the list of things that can be retained by the the housing successor agency, and it's very similar to what we'd known before. Encumbered funds, yes, those that are not encumbered or called for in a ROPS would get swept. We started talking a little bit about a long-range property management plan. You can, under these sections, 34, 191, 5C2, there are properties that can be retained for governmental use. Again, it's not clear on the compensation that needs to be paid for those. In terms of the Alex Theater, we wouldn't want to assume that, because once you do retain the property, all of the agreements come along with it. There are some agreements where we still need to make capital improvements to the theater that the city simply cannot afford. So we have been talking, we spoke to you about it before, talking about how do we retain the Alex Theater as well as get the tax increment to make the necessary improvements. There are opportunities for us to keep property for future development, and in those cases we would probably need to have the agreement of the other taxing entities. We would be able to identify those properties that could be sold to a third party. And then finally, there's property that we hold that would need to be disposed for an enforceable obligation. The parking lot on Wilson in Central is the one that really pops out where the Courtyard by Marriott project would go. Now, we don't think that we need to wait for this plan if we dispose of property through an enforceable obligation. We're obligated to do that. So that project could go forward in advance of this. Here are some just upcoming deadlines. Staff is aware of them and will not miss them because the penalties are too great. In some cases, the ROPS schedule that you'll be looking at in just a minute needs to be in by September 1st. If it's not, there are penalties of up to $10,000 a day and a reduction in your administrative allowance. The housing assets, those are due to the Department of Finance by tomorrow. We have been working for the last 2 weeks because the Department of Finance didn't tell us how they wanted this. So we've been working feverishly. That is just about done and should go out tonight. But you'll see the schedule through next spring when we anticipate being prepared to get our finding of completion. This is important, and I'll touch on it again when we talk about public improvements. If we want to use bonds, and we're prevented from using the bonds right now, some of the public improvements will have to wait till next spring to do. We have, in the case of the library, we have a contract, or I should say, a proposal that's ready to go for design of the central library that we were going to fund with this tax, with this bond. We do have for you to look at ROPS 3. That is our schedule. Again, it's for January to June. It is broken into these categories, and I'd like to go through just some of the highlights of each of those categories. I would also say, in addition to this, in addition to these categories, we've included one more, and those are the obligations from the payment schedule, the last payment schedule, for which we did not have enough funding. We will use cash to make those obligations that we talked about before, and then we will include them on this ROPS to make sure that we get approval. As I say, it's January to June. It seeks authority for $47.3 million. Now, not all of that will get spent, but in the case of the library, for instance, We need to have $10 million to let that contract. So it's not a contract you would let and then go ask for it later. So in some cases, we've asked for the funding so that we could go out to bid on those contracts. Here's the breakdown. Bond funds, we have about $17 million. Some of this other, the 7.8, a majority of that, the big chunk, will come from Doran Gardens. The sale of those properties will then go to repay the loan that we got from the state of California. Again, we'll need approval on these every 6 months.
Okay, so if you, like the library, you can go ahead and do the design, plans, and specs, but you don't have the design, if you don't have it under contract before the 6 months are up, it'd be continued into the next period?
Right now, that's what we would do. We would continue it and put it on the next payment schedule, and for a funding source, we would put cash so that we wouldn't be double dipping into the property tax trust fund.
Once under contract, you have to go with the contract, so how could they interrupt it? Say, stop, it's not approved for the next ROP.
Well, we think, I'm sorry, let me go back. With bond funds, we're holding those. We never have to sweep those. So if it doesn't happen in this current period, we would go to the next period. 1484 recognizes those bond projects as enforceable obligations. If the Department of Finance said, we're going to reject it, then I would turn it over to Ms. Van Meiden and say, go save my project.
Design would stand alone, plans and specs would stand alone, construction would stand alone. 3 different steps, right, that you could stop at.
Well,
Theoretically, yes, but with the bond proceeds, if this holds, and presuming that DOF doesn't go rogue, it would stand to reason that we would get the monies for that. Now, the Alex Theater, on the other hand, would be a different, I think, be more akin to what you're describing.
I mean, if it's under bonds, then once the design is approved to start, we can go straight through, because we'd be using the bond
yeah,
proceeds.
what we've done on this payment schedule that we'll walk through is we've put, let's take the library, for example. We've put $10 million on this schedule. And we're going to get, let's say they approve it, because it's with bond proceeds, we would consider that $10 million authorization to spend $10 million. In the first category of bond, debt service, and loans, we have the bonds that we've issued. The service in this period is about $3.2 million. There is a loan with Union Bank for Vassar City Lights. That is about $1.5 million. And then we've included this Doran Gardens loan. That will be repaid through the sales of units. All of these were approved as part of 1 and 2, and we're seeking and don't think there would be any reason why we wouldn't get approval on 3. The second category of agreements and contracts, this is pursuant to the direction that you gave us in May. We have listed the Alex Theater, and I will note that this $5.2 million includes the expansion that you had talked about and directed us to go forward with. So we will be asking the Oversight Board for additional funds beyond what was in our enforceable obligations and hope that we get that approved. The Museum of Neon Art is there, the Lemley Lofts project. This $2.5 million, that assumes that we enter into a tax sharing agreement with the county. We just didn't know how to treat this because we need to put it on this payment schedule in order to get authority to do it. We're still working with the county and getting them comfortable with the idea. So we put it on there, and it is subject to that tax sharing agreement. Again, all of these, not these amounts, but all
of the county, wasn't there also an agreement with the school district?
Yes.
And the community, all the taxing entities.
All of these projects were included on 1 and 2. They were approved as enforceable obligations. Again, not this amount of money, but the obligation. Public improvements, these would all be funded with our bonds. Again, you directed us to go forward on these three projects, the Central Library renovation, a portion of Central Avenue improvements, and Mr. Zern in Public Works has other funding for the rest of that, and then the full Paseo and parking lot improvements that would lead into the civic complex that is now the ARC Central Park and Central Library. Again, the Department of Finance approved the projects with 1 and 2, but we weren't sure with, it was unclear language in AB 26, so we didn't move forward on those projects. We're putting it on this ROPS so that if it gets approved, we can move forward with that. There are some other categories, staffing costs. These are everything but salaries. The new law allows you to include that as an enforceable obligation and get property tax for that. The agency M&O, that is what it costs to run the successor agency from a maintenance and operations perspective. We're looking at the ability to, because that the successor agency is responsible for those charges, making sure that the general fund is reimbursed for anything that they might front in this area. So we're looking at that closely, and we hope that we're able to move some of that to the general fund. We have about $2.3 million of unfunded ROPS enforceable obligations that would be paid for with existing cash. Again, at the direction of the Department of Finance, they said put those on your next ROPS for approval. And then our administrative costs, those are salaries of staff specifically for unwinding the agency's activities. Last, this is a very time-consuming, meticulous document. We want to make sure that we cover everything. Thursday, when we sent this in, we continued to review it and found that we had a couple of other things that needed to be added to it, and that's what you received on your desks this afternoon. There is an additional line item for legal services, and then this Union Bank loan repayment. We thought that there would be enough property tax in the distribution to make this payment. There was not, so we've used cash for it, and we again need to add it here. A final item that is on your payment schedule is what we call the county passback. If you recall, in 2000 we entered into an agreement with the county. We passed through to them certain amounts of tax increment. They passed back to us 60% of that to build public improvements. We're just not sure how the law treats that, so we've included that on this ROPS. If the Department of Finance tells us, no, you don't need to put it on there, we'll just take it off, but we will have your approval to do that. Last thing that I would say, and if it is not in a substitute motion, I'll ask you to, the format that we've provided to you is an old format provided by the Department of Finance. They said that they were going to be changing it. To date, they have not posted that. We simply cannot wait. We weren't sure if we were going to meet next week or not. We simply can't wait. The penalties are too much. So we're giving you all of the data in the old format. Should that change, we're asking your authorization just to make whatever modifications that the Department of Finance is asking us to.
Need a motion on that?
As part of the motion to approve, and I think Ms. Van Meiden has an idea.
Yes, Successor Agency Member Weaver, we'd ask that you authorize an amendment to the resolution approving the ROPS to allow us to convert this information into the approved format that's yet to be distributed by the DOF.
What option are you recommending?
We're what's turning out to be option 3. We did not get a definitive do this or do that. The Department of Finance has said, we're not going to let you revise your ROPS, put it on 3 and use cash. So we will pay cash for those obligations where there was a short of funding. We believe that that is considered property tax. We are only paying those obligations that we absolutely have to. We'll push everything else out to 3.
And we can include items that are not paid on ROPS 2 on ROPS 3?
Yes. And we have done that.
So long as they're not rejected items.
As long as they're not rejected items?
Do we have a good, do we talk with the Department of Finance directly?
We do.
Okay, do we have pretty good credibility with the Department of Finance?
I think we do. Ms. Van Meiden and Ms. Babolian, probably as good as you can get. We did notice when we started asking some questions as 1484 came out that they stopped responding. And my guess is they're simply trying to figure out what
Makes
position
sense.
should they be taking. So everybody's a little bit in the dark, and what we've done is try and give you the good faith effort and in a way that protects us. We've learned from some of the mistakes of the last two schedules to protect us. If one thing happens, we're not cut out and having to wait 6
I'm
months.
just concerned reading about all these other cities. If we have good credibility with the state with what we're sending them and they're approving it, that gives us, I would think, anything more that we send in, they're likely to be receptive to that compared to other cities that have borrowed from here and borrowed from there and done everything.
Well, I think your statement, there's some truth in the statement, and we're trying to build a foundation of trust because while there was a whole bunch of information that went up first, as we move forward and we start to knock off these obligations, there's less and less information, and it is tied to something that they've already seen. So we're hoping that the review process becomes easier and easier for them because we've given them good information, and as we move forward, there's less and less.
One last thing. In reading all this, am I wrong in assuming that the state legislature has heard from their constituents and local governments and so on, and are finding ways to adjust and give more of what they took away from redevelopment back through different means? Maybe I'm not reading that.
No, I think what you're saying is some of the legislature's willingness to reconsider the haphazard way that they were dissolving redevelopment and to go about it in a slightly more thoughtful way is what I take away from 1484. Now, when you look at what is being approved from the property tax trust fund versus what they're saying, we'll just use cash on hand, it tells me that they are looking for they're looking to keep as much of the property tax as possible, and if it's cash, you go ahead and use that because it's going to be hard to fight over that if the cities have control over it today. It'll be a little bit more difficult for us to fight for items that are funded by the property tax trust fund, simply because the state now is saying that if there's a dispute, they retain the right, the sole right, to be the arbiter over what is paid and what is not, and we can use property tax or even sales tax as leverage over the cities. So it just seems as though they have a number. They're willing to allot that to the agencies or the former agencies. Anything above that, use your cash or your bonds that you already have, and if you don't have those, then tough luck.
I would also add that some of the things that were included in the finding of completion provision is a way to try and go back and allow a local tool, albeit we still need approval from the state to do it, as opposed to the agency being able to decide for the local community what's best. But setting aside a certain amount for affordable housing, being able to manage assets and use those for development, those are nods at the tool that we used to have, and maybe a preview of what's to come.
It's like an evolutionary kind of process at the state level. A year, 2 years, 3 years ago, soften the blow.
Which
But
makes you
it'll be
wonder.
done very quietly.
Makes you wonder what the purpose was behind all of this anyway. If the state isn't
Right.
getting as much as they thought, why are we still going through this exercise?
Yeah.
So with that, staff is recommending approval of this recognized obligation payment schedule. We will take it to the Oversight Board on August 22nd and then submit it to the Department of Finance prior to the September 1st deadline.
Are there any other questions or comments? Thank you for all your work, Mr. Lance Payne, and the rest of the staff. I know it's complex and difficult to deal with, but I think you're bringing us through the forest.
I'll move 6C1 as amended. Is that good enough?
Second.
Roll call.
Board members Friedman.
Yes.
Menuchyan.
Yes.
Najarian.
Yes.
Weaver.
Aye.
Chairman Quintero.
Yes. What's next?
At item 6D, City Attorney regarding cancellation of the August 7, 2012 Successor Agency meeting. At 6D1 is a motion canceling meeting.
We're not going to, huh?
Do we
Mr.
want
Chair, I was
to-
just going to say that we've actually switched to, with the item on 6A1, you switched to special meetings for the successor, so we don't need to take action on this item.
Okay. All right, next, please.
Will we adjourn?
Are there any agency member or staff comments?
I hear none.
Will we adjourn?
We are adjourned.
Second.
Second.